What is up, guys? Welcome back to the channel. Welcome back to the Crypto Unhyped headquarters here in beautiful sunny Marbella, Spain. I'm Pat. This is Crypto Unhyped, the one place where we focus on the data, not the drama. And we got some serious data coming out right now, actually. The jobless claims, usually not a massive one, nothing that we really focus on as far as volatility goes. But since the Fed is basically flying blind since a couple of months because of the government shutdown, anything that's current data counts. We were supposed to get GDP data today, which has been delayed. So Q3 GDP data usually comes in 3 prints. Any GDP data comes in 3 prints: advanced, second, and final. They've decided to give us all the 3 prints combined on December 23rd, which is of course not optimal because on the 10th, as we know, we get the rate decision by the Fed. So any data is good right now for the Fed to have a better idea what to do. Another narrative is of course also good at the moment, which is bad news is good news. Anything that comes out bad as far as the US economy goes puts pressure on the Fed and therefore makes it more likely that we see rate cuts. So what we got right now is the initial jobless claims. This is the actual data that came out from the last week, and everything else that we've been waiting for recently was delayed September data. The same as PCE, which was also supposed to drop today, but has been delayed to December 5th. But keep in mind, when we get that data on December 5th, it is still only data from September. So really irrelevant, outdated data. So let's get into the data right now and see exactly what we got here from the initial jobless claim. And we actually have a positive reading. So this takes pressure off the Fed to cut rates. This is over the last week. So the previous was 222,000 jobless claims. The forecast was for it to go up to 226, and the actual is 216. So good for, of course, people in the US, less unemployment claims have been taken and so on. So from that perspective, good for risk assets, and for the Bitcoin price, of course, not so good because it takes pressure off the Fed to cut rates. We are getting more data today, actually, and that is, of course, we know yesterday and the day before we had the 3-year and the 2-year and the 5-year note auctions, and they came out with lower rates. Low rates were accepted by the public to buy off this debt from the US, which is a good sign, which shows us that the buyers expect for better monetary policies, or in other words, for the Fed to cut rates. We also saw that in poly market. I'll go over there in a second as well to see what the current odds are for rate cuts in December. And actually, Jerome Powell came out and said he wouldn't be against cutting by 50 basis points. So a lot of bullish momentum from that perspective currently in the market. And we got to see exactly what happens when the rate decision takes place on December 10th. Guys, awesome to have you here. Thanks for joining me on the stream, especially if you're new to the channel. Warm welcome to you. Consider joining us here in Team Crypto Unhyped by hitting the subscribe button and all that good stuff if you want to catch these kind of updates. And of course, after we went through all the data and all the key stuff that I have to cover on the stream, because tomorrow's Thanksgiving and historically, there's been a lot of volatility on that day. I want to get the data out of the way. Then we get into the Bitcoin charts and see exactly what the key levels are across the next few days that we need to hold or reclaim in order to flip bullish or to continue in our broader downtrend right now. So guys, here we have this covered 7-year note auction coming out today, 1 o'clock Central European time, which makes it, 7 a.m. 7 a.m. Eastern time. And then we will know more about these note auctions that, of course, caused some volatility in the markets already in the last couple of days after the print of the 2-year notes came out on Monday, we had some positive action in the markets and started pumping from there. So let's see if this continues positive. Any data that is favorable for us, for the Bitcoin bulls right now, is of course something that we want current data. Anything that's PCE, CPI, PPI, NFP, and all this stuff that we got recently is all outdated September data. And the other stuff that's still coming out in December and early December is also outdated data. So really important to keep that in mind, and don't get trapped by this data and anticipate this data and any massive moves from stuff that's coming from September. Here is something really important. Tokyo Core CPI. That's dropping. When is it dropping? It's tomorrow on Thanksgiving. 18:30 Central European time, which is right after noon in the US. So while everyone is getting started with their Thanksgiving party, this data is dropping. Why is this dangerous? Normally something not we would look at, but since the markets are closed, right? We don't have the backing from ETF flows, and Wall Street is closed. So that gives a big opening to the bears to drag the price down while there's low liquidity in the markets. So we can expect to see a bit of a downside tomorrow during Thanksgiving. I know a lot of people talk about the massive gains that were made historically on Thanksgiving, but trust me, guys, it's not as good as it sounds on X or on other YouTube channels. I will present you with the data that actually Thanksgiving is a really bad day for crypto and for Bitcoin. We have the facts here and I will show it to you in a second, but keep your eyes out for that. The way I deal with it is I drop leverage in my positions or exit all leverage positions and widen my stop losses because it's a great opportunity to grab all that liquidity by market makers due to the lack of liquidity in the market. The moves, the funds that they need to utilize to cause these drops is of course way smaller since there's no liquidity in the market. So a huge opportunity for bears to drag the price down lower. And yeah, guys, so the best thing to do is sit on the sidelines, wait it out, or take opportunity. What I will do is I will buy the dip and then wait for Monday as I expect the market to recover really, really fast. And of course, guys, none of this is financial advice, purely for educational and entertainment purposes. Always do your own research, but really focus on this tomorrow on Turkey Day. You want to make sure that you're really taking care of your positions and everything and know exactly what's happening in the market. Any big wick to the downside on any larger time frames tomorrow is something that won't worry me until we break the structure on at least the 4-hourly chart and start pumping down again, get back to support to that $82,000 to $80,000 range, and we'll cover all these levels in a second. Guys, by the way, the Crypto Unhyped data sheet is of course always available here in the description, in the chat right now as well. You can download it over on X as well. And here you get these updates every Sunday at noon. This is what's coming up in the following week always, the macro data to watch, the on-chain data to watch, the current month's historic performance, as we see here for November, and the key levels on the monthly, weekly, and daily chart that I'm watching for Bitcoin. And this is absolutely free. All you got to do is drop your email and you get it sent straight to your inbox. Now, guys, let's get over to X. This is what I posted this morning. If you read it already, great. But this here is the statistics for Bitcoin on Thanksgiving. And I think the image says it all. It's usually not that great. Historically, the Bitcoin closes red 66% of the time, 2/3 of the time. But the volatility is huge. We usually get 6% swings on Thanksgiving. And of course, that is a massive price swing. And that's why I'm telling you, there's going to be massive liquidity traps. So make sure either to take advantage of that or know exactly where you're at with it, because that's purely based on low liquidity and people taking advantage of the market. And until the structure gets broken, this is insignificant. And we can expect that to be an opportunity and the markets to rebound on Monday. Of course, Thursdays is always Thanksgiving. The whole day the markets in the US are closed. Fridays is a bit of a zombie day. Markets close early at 1 p.m. And therefore, this is a really, really low liquidity time and a really great opportunity. And guys, yeah, what else do we have here in the statistics for Thanksgiving? The average returns are pretty damn flat, 0.14%. There you can see just this statistics alone shows you that it's usually not a lot going on these days. But of course, as far as returns go, but volatility can be massive. We see some massive drops like 2020. We see that the volatility spiked to 14%. We had negative returns of 8%. And yeah, there's a lot of dates where we had some huge swings on that day, but overall a negative day for Bitcoin and for crypto. So keep that in mind. A lot of people are saying the opposite. Not sure why, but I mean, numbers don't lie. The statistics speak for themselves. Right, guys, now let's get into the charts and I will cover everything as far Bitcoin goes. Here we start out on the weekly chart. Here we have just to get a bit of a view of what the current key important levels are that we need to hold in the next coming days here. while the markets are closed. And one, of course, specifically comes to mind here on the weekly chart, the current support level here coming off, of course, the 100 SMA. Then after losing the 50, that became our natural support here. And there we also have perfect alignment of the 38.2 on the Fibonacci retracement for the entire bull market, as well as the 78.6, where we're retracing here from the last low to the high here, from the April lows to the current all-time high, giving us a nice strong cluster of support on a high time frame here, also in combination with that prior range here from the lows from back in spring. So really, really strong support cluster here. Anything below there on Sunday would, of course, be terrible. And then we can expect to move down here to the next logical support area between the $75,000 and $70,000 range. So I don't expect that to happen. I expect to get a pump from this level here. Potentially, we can see a bit of a relief rally or a dead cat bounce and a double bottom at this level here, but I expect this here to hold for now. And also, the most likely level for me to see the underside test of the 50-week SMA from. So, and there we come to the next thing, the key resistance level here on the weekly chart. And there we see right up here in the $100 to $101,000 range, also with the 50-week SMA now turning downwards again, a very strong cluster. The same two Fibonacci retracements that we just looked at here for support are giving us massive resistance in the area. We have the larger one, the 23.6, they're lining up with the 50, and then also the previous dynamic support line here, and of course the 50-week SMA and a massive horizontal level. So huge resistance here, and we spoke about it a bunch in the past. Usually an opportunity here to exit the market. We've seen it in previous cycles. Let me just go back here. 2021, something we spoke about in the last video, where we came down to the 100-week SMA, very similar to right now. And then from there on, saw the underside test of the 50-week SMA, there the rejection, and then went down to a bear market lows. So that has been the case every cycle so far, most cycles. We looked at it here in 2017 as well. There we had a very similar scenario, broke down below the 50-week SMA, tried to hold it as support, then fell below it, got an underside test. Huge opportunity to exit the market or start shorting the market, or do a combination of both things, or start your DCA strategy, and so on. Huge opportunity at those levels. On the other side of the coin, of course, if we break that resistance, then we would look extremely bullish again. Then we would do something that we have never done in the history of Bitcoin, to reclaim the 50-week SMA, to turn it back into support, and that would give us a huge shot then to come back up here to that red or pink line here, which is of course a shorter version of the 8-year resistance, giving you a really nice visual of how the last 3 all-time highs have exactly been at the 8-year resistance. So that would be then of course the key resistance if we reclaim support here again on the weekly chart. That is the bullish and the bearish scenario here that we have on the table. Of course, I keep you updated on all this as well on X here. I posted it the other day. Here, the optimist, the realist, and the pessimist. And that's a long thread. If you want, go over there, check it out. And there you see my thought process about the 3 scenarios and the paths that I see as the most likely ones here for this, for the remainder of the bull market, or here for the bear market now. Of course, we got to be, as traders or as investors, we all have biases, but we always got to be open to adjust. If we have such a big ego, then we just stand in our own way, right? I see a lot of people that defend their bias over on X and stuff after it's already been invalidated, and they try to come up with excuses and explanations of why it still can play out as they said. But that's just a sign of someone who's not really mature enough, or as a trader or as an investor, and does not really take the opportunities that arise. When you see that your thesis has been invalidated, you have to be ready to flip the script and to take the opportunity rather than to shoot you in your own foot. That's really, really important. And as we know, there's a lot of ways to trade and invest. There's no right and wrong, or there is right and wrong. But if you have a solid system and you stick to it, often it only comes down to psychology and to discipline, and that's what a lot of people are lacking, and that's where I see most people fail. So if you got something that works, that's proven, just stick to it. And whenever you see that something breaks or flips on you, then be ready to switch your thesis and your bias to take opportunity of everything that lays in front of you. Right, guys, that's it here now. Let's get back into the charts here before I become a motivational speaker rather than an analyst here. And yeah, guys, now let's go here, see what else we got on the weekly chart. This is another version of it here. Let me just see what else I got going on. I've got a bunch of different things that I set up for you that I wanted to go over in the next few days here. And one of them is, of course, this big cluster that we found as support here on the weekly chart. But there's some really interesting stuff as well. If we look precisely at the 38.2 Fibonacci retracement level. So let me see. Here we got it. So this is something that I spoke about to you guys before as well. We have taken the Fibonacci retracement from the bear market lows to our highs. So at this point, when this was our high, we took it from the bottom to the top, and we saw that the price bounced perfectly off the 38.2. Then we did the same thing again here with this one. We took the Fibonacci retracement from that low back to the current high here, got the bounce off the 38.2. And now, right now, we also getting a bounce of the 38.2. The big difference is that we don't have the cluster support that we had before, the combination of the 50-week SMA and the 38.2. But therefore, we have the 100-week SMA here. And therefore, still for me, the most likely scenario that we're getting a bounce exactly from this area. Potentially a double bottom, but most likely that the short-term or mid-term bottom is in now, and that we now headed up to see whether we can flip the 50-week SMA back into support or we get a rejection there. So this is my short to mid-term scenario here for Bitcoin. Well, not really short-term, more mid-term, more likely that it takes a while before we get up there, because we are still waiting for all this data to come out, of course, in December. Early December, we don't have a lot coming out that can influence the Fed. Actually, on the day of the rate decision, on the 10th of December, we have the CPI data coming out for November, but it's probably too late already to influence the Fed on their decision. And let me just open up Polymarket actually. And then we see exactly what the current odds are. Yesterday, during the stream, we were right at 85%. Now we can see it dropped slightly to 83%, likely influenced by the very solid jobs data that we just got from the unemployment or the unemployment benefits that have dropped. So that could have a little impact on it, but nonetheless, still huge favorite that we do see rate cuts next month. Right, guys, now let's go. Now we have all this covered. These are the key events to look out for. Once again, in case you weren't here in the beginning of the stream, tomorrow we have the Tokyo Core CPI data dropping. And that is right during times of low... sorry, guys. This is right during times of low liquidity in the markets due to, of course, Thanksgiving, due to the fact that during Thanksgiving, US markets are shut down. And then on Friday, it's a short day on the stock markets. They close at 1 o'clock. So we have a bit of a zombie time going on. And that opens up a huge opportunity for bears to cause a bit of a black swan event where we could see a massive wick to the downside. But I'm expecting this to recover really fast, this to be an opportunity, and I will not worry about it until the market structure gets broken on larger time frames. So really, really careful. Right around 12:30 p.m. Eastern time tomorrow, that's when the data drops in Japan, and as we know, markets are closed and so on. And the way I'm dealing with it is I'm exiting leverage position or lowering leverage, widening my stop losses so I don't get liquidated, because that's what these guys are trying to do while we're eating our turkeys. All right, guys, now that's it here for the larger time frames. Now let's switch over to the daily chart there, see what the key levels there are that we need to hold over the next few days. We can see, of course, here a nice reversal attempt right now after we've seen this massive hammer. Also something that I posted about on X the other day while it was printing. We haven't closed the day yet, but there we saw that we had massive volume on that candle, and a lot of people are looking at this as massive bearish volume, which by the color of it, of course it is. We can see a massive bearish volume bar here, also bearish candle. But really, if you look at the price action in that candle, we can see that bears really try to press the price down, and bulls were the ones that won that battle by printing this hammer here. Then here another smaller hammer right after, followed up by a bullish candle, and therefore a confirmed reversal candlestick pattern here. And our logical next resistance here on the daily chart would be right this area up here, right in the $94,000 range. There we see a strong cluster coming from the prior dynamic support line of this falling wedge pattern, where of course we broke down to the downside, and we actually almost met on the spot the exact target for this pattern. And that lines up here with the 21 EMA and the 50 on the Fibonacci retracement, where we're retracing the last portion of this downtrend here. And therefore, likely that we find some resistance here, but the key spot here on this chart comes above there. So we see the 38.2 and the 61.8 lining up here, and there we also see the wicks here from the prior range that we've been trading in that we lost now. So very strong resistance cluster here in that area, and that is the key level above that we want to reclaim, right around $101,000. That is that would be the ideal scenario to reclaim that, and then to flip bullish on this time frame. Then we have an even bigger cluster above us here. We can see the prior high in this downtrend. If you look at the market structure, right, we've been printing lower highs, lower lows, all the way till the point down here. And if we look for the last prior significant high in this downtrend, we can see it's right here at $106,000. On the spot, almost, we also see the 200-day SMA and also then the resistance of the falling wedge. So a key level that we need to break above $106,000 on a daily closing basis would flip us bullish here again on the daily chart, and then give us a huge opportunity here to flip the script to also then, of course, close back above the 50-week SMA if we then follow up with a weekly close. And then we have all the opportunities again here to long back up to the 8-year resistance, somewhere in the $128,000 to $130,000 or even $135,000 range, depending on how long it takes to get up there. Momentum, of course, continues to the downside. We've seen the next key level is down here in the $75,000 to $70,000 range. There we still find massive support. But once again, guys, I don't expect to get down there quite yet. I expect to find our bounce now to get the underside test and the potential flip of the 50-week SMA from the current level that we're at. Like I said, there is a potential for a massive wick to the downside tomorrow or even Friday, and then we could see a double bottom formation here in the $82,000 to $80,000 range. But then I expect to get a nice recovery on Monday from where we then go up. Now the key levels on the 4-hourly chart. Today we're doing it the other way around, by the way, guys. Normally, of course, we always do a top-down analysis coming from the higher time frames going to the lower ones. But why not? Let's switch it up a little bit, right? So here we see, we've been speaking about these targets the last few days. These are actually also a couple of trades that I took here, and nothing that I speak about on this channel, but in the future I will give you access to my trades and my investments as well. And actually on Friday, I'm bringing out a strategy video where I'm speaking about the strategy that I used during the past bear market, the current bull market, and that I will also apply on the next bear market to increase or multiply my Bitcoin and crypto positions in a very simple and effective way. So if you're new to the channel especially, or even if you're a subscriber here, make sure you have that notification bell activated so you don't miss that video. And that will be a 3-part series where then eventually I will, in a few weeks time, I will add a second part to the series where I talk about more short-term trading stuff and then long-term investing as the third part. So good stuff coming out, not just here daily analysis and streams. We will bring out videos as well, and it will be good content that hopefully is evergreen stuff that you can utilize for yourself and take into consideration when you do your research. So here's the key level to the upside, very similar to what we just saw on the daily chart. We have a massive cluster above us here. Whenever we see something on the daily chart, then it's likely to become strong resistance on the 4-hourly chart. And here we see a great example of it. There we had right now above us the underside in the $98,000 to $101,000 area, which of course comes into play up here. In this area here, when we get up to this bar where we also see the 200 EMA here on the 4-hourly chart, but the first step here is to cross above the 50 again, which lines up perfectly here with the 61.8, where we retracing this downtrend here. Why we are retracing this downtrend is the same thing here. We want to get back above that high because it's the last significant high in the broader downtrend. And by definition, we need to close back above there, reclaim that as support to flip bullish here again. So that's the first step here, get back above right around $88,800. Then The next step here would to start closing above $92,500. That would then flip this bear trend here into a bull trend, and then hopefully that drifts over into the daily chart, and we then see our underside test here in the $101,000 to $103,000 range, and that test of the 50-week SMA. So nothing really changed here. What we want to do here now is, of course, to not break the structure. We can see here that we've been locally printing higher highs and higher lows. So we want to hold the structure. In order to do that, we want to stay above the prior low here after printing this higher high here, and that's right at $86,250. If we start closing below there, likely that we come back down here to revisit the current lows. These are the key levels that you need to look out for, especially tomorrow. There's a huge opportunity that we see some downside there, and then to the upside here is the key point that we want to crack right at $88,800. Right, guys, that's basically it here. So far, so good. We're holding support. We're still sitting right below resistance. We have a huge opportunity to flip bullish, at least on the 4-hourly chart. We've been looking at that for a while now. Opportunities to take tomorrow, of course, very risky business on such low liquidity days to be trading. But I will be taking that opportunity if I see that we form a double bottom formation there, as I'm anticipating a move to the upside on Monday when markets open again. And yeah, guys, let me just get into the chat now. I can see a few messages from you guys there. I see Satoshi posting a rocket, of course. What else would he do, right? And we got Josh in the chat. Is tomorrow prime time to short a market locally? Well, as I just said, it's a risky business to get into these things. But of course, if you catch the opportunity on a lower time frame, such as an hourly break of the structure, and then it's a very, very good opportunity, potentially even below the current wick, below the current low, as there's a huge opportunity for bears to liquidate and to trigger all these stop losses. Therefore, yes, opportunity will be there if you have the balls to take it. That's up to you. I'm not here to give anyone financial advice. And simple and effective signals. Yeah, I don't know. Like, read between the lines. Those are my kind of signals. I'm not here to push any signal groups or to tell you exactly what the trade entries are. But like I mentioned, I'll be looking into this kind of stuff in the future. Maybe I'll share some of my trades and so on. Let me know in the comments if that's something you're interested in, or even over on X. By the way, on X, I only see the chat here on YouTube. So if you're typing anything over there, I can't see it. Appreciate it, Alex Jones, #1 conspiracy theorist here on the channel right now. Really nice. Thanks for subbing. Thanks for liking. And yeah, if we don't reclaim that 50-week SMA, then we have the confirmation. Historically, we already have the confirmation just by closing below that we already did enter the bear market. Of course, I spoke about it a lot in the past. The dynamics in this cycle have changed massively. We see, if we just look at the trend, right? If we look at the monthly chart here, for example, to get a nice perspective of the trend. Let me just exit logarithmic. Actually, let's do it in logarithmic. Then we look at the previous bull markets, right? Here we have, for example, this is here 2017 top. You can see this just straight up and down again. And the structure is completely different, right? Here's just an absolute rocket. Here we have the same thing again, absolute rocket. Here, it's such a healthy, sustainable trend that we printed here. And that is, of course, because we've been rallying purely on institutional and government investments. We have not had any retail investors really getting into it. And that's, of course, because as an exception, we've been pumping here in this bull market during quantitative tightening. That's when the printers are off. And since Bitcoin is a massive liquidity sponge and a huge indicator for whether the printers are on or off, therefore, it's very strange to see such a risk asset, as it's still being called, as Bitcoin pumping during these times. And quantitative easing will start, as announced by the Fed, in December. It's not one of these events where Bitcoin will just fly off the shelves and people will start buying it and the retail will jump in, and therefore alt season will also start. This is actually what we need. We need retail investors for alt season to start, because governments and institutional investors are not really buying your meme coins and stuff. They have to invest in solid, legitimate stuff that has some price history in the charts, as well as they have to offer to their customers. And yeah, guys, this is something that we're still looking for, the favorable rates for retail investors to really start purchasing risk assets, right? And this is something that we can expect to happen when quantitative easing starts, but then it needs to be, of course, be followed by interest rates cuts in order for retail to have favorable conditions to borrow money, to buy assets, and so on. The same as the US and the government is doing. Right, guys, let's see what else we got in the chat. Alex Jones was right. Now, what we see here, gave a lie. King Somming Genting. Nice to see you here again. One of the #1 fans here on the stream. And yeah, guys, good to see you guys participating in the chat here. I think I have it all covered now. I'll be back tomorrow on Thanksgiving with a stream. I don't know what time yet, but I'll update you on X as always. So make sure not to only subscribe here, make sure to follow over there. There you also get price updates. And here, this is what I posted earlier, of course, this statistics about Thanksgiving, and then all sorts of posts where I talk about the Bitcoin price and so on. Right, guys, I'm gonna log off here now. Hope you enjoyed the stream. Of course, if you're new to the channel, thanks for subbing, thanks for joining us here, and please drop me a like. It really helps me out with the algo. As you know, I'm not pushing any Femex, Bybit, or any other links here on the channel, so this is the only way you can really pay me back. The only currency that counts here is engagement on the channel. Okay, guys, that's it for me for today. I'm going to head out to the gym now. And as always, happy trading.